Hi, you've reached Jeffrey Cohen, President and founder of Chicago Quantum, and I'm here to talk about our business and talk about the stock market. This is the fifth week, and so I've got my list here. I find this is helpful to talk to you about where we are. So we're in week five, and key takeaways, right? The market's been, it's a good week for the markets. Investment markets are generally up this week. So I actually saw a headline, Yahoo Finance, right? Stocks rise, closing out the best week since December despite jobs letdown. And so there just seems to be a lot of optimism, and we've seen it across the board. The second thing, long bond rates are moving up. Now, this reduces the price of your bonds. So the reason I bring this up, right, normally we talk about stocks, is if you've got an IRA or mutual fund, you might have some of your money in longer bonds. And so what happens, you look at the interest rate going up and you think, oh, it's great, I'm going to make more money. But your portfolio is valued based on the sale price of that bond if it's sold today. And the bond will sell for less money, mark to market, the bond's value. It goes down if the rates go up. So when you find out that we are weakening the dollar, we are doing fiscal stimulus, right? We're printing money, we're handing it out to people. Well, you got to pay it back at some point. And so the people that lend you the money want a higher interest rate if you're the government. And so I say take a careful look. And just so you know, right, we have pulled out of many of our longer duration bonds, bond funds, because it's just not what we want to be. We think interest rates could go up even more. So the third is the gamma squeeze. So we talked about this over the past 2 weeks. It was really exciting, right? Stocks going up, GameStop, and all this kind of business, right? Everything's going up. And to be honest with you, it felt really good to see everything going up. Oh, easy now. So I didn't know what to do, right? I've been looking and all that. And so just moving this over here. So it's done. GME, AMC, Bed Bath and Beyond, Nokia, uh, BlackBerry, Fizz, which is a bubbly water company. Um, a lot of these stocks have fallen right back to where they were. It's not to say that a team of thousands of motivated investors can't drive the stock price up. But what it does say is that shiny object, when there's something else to look at. Oh, another stock. Oh, another stock. Oh, bonds and dividends and yields. And oh my God, I got a job during the day. I got to go work. When no one's looking, the stocks go back to the fair value. And so that's what's happening. Now, one of the things that I noticed was there were people, very wealthy people or more market maker type people, who were pumping people to hold, right? They would say, oh, GameStop, $200 a share. Hold the line. We're going to make the rich people pay. I feel really badly for that, and I feel badly for those who lost money. I read somewhere that somebody lost $200,000 on GameStop because they thought they were, I don't know, doing some kind of revolution. Instead, all they were doing was buying an overpriced stock, which went down. So I'm very sorry for those who lost money. The next, so Friday continues to see increases across all these things, equities, gold, oil, the dollar, bond yields, Bitcoin, pretty much everything went up today. I guess people didn't want to keep their money in the bank today. And I saw one sector fall, so I'm going to walk through this with you. So I like to use Yahoo Finance, and let's get started. So I already showed you this page, but we're going to walk through, right? So the S&P was up. The S&P 500 is 500 stocks. It's market capitalization weighted. They're the big companies. The Dow's up, the Nasdaq's up, the Russell 2000's up. That's the small stocks. Crude oil was up. Oh, I'm on YouTube. It says that's cool. Um, the euro at a buck 20, pretty cheap. So dollars up, right? It only takes $1.20 to buy a euro. I remember when that number was $1.22, $1.24. The 10-year bond is up. The yields are up. Just lots of things are up. Bitcoin, that's up. We're at 37,750. Wow. And even the Nikkei is up, right? Typically not a great performer. So we're going to walk through some things. So this is FinViz. I love FinViz. They do a nice setup here. So you can look at the S&P 500 1 week performance, and you see pretty much the whole thing's green. So pretty much every industry went up. And when you look at real bright green, plus 6%, there's plenty of bright green out there. But there's some basic materials that are down. Healthcare is down in general. I mean, AppV is up, but for the most part, it's a tough time. Biotech's down. Diagnostics and research is down. And there's always your onesies, twosies, right? So Qualcomm is down. They must have had bad earnings, right? It's earnings season. So you start to read about things like, oh, look at that. Clorox is down 9%. Clorox. I thought that would be a great business right now. I got to wash my hands, right? Clorox. Hand sanitizers. International paper's down. So my guess is there's individual stock stories, but in general, the market's up. Market's great. So now let's look at the world. So if I look at the world for the week, the world is up. It just shows, right, we're a global marketplace here in terms of the stock markets. So I just want you to think about it. World is up, U.S. is up, but of course certain stocks, maybe not so great. Unilever's down. British Petroleum, by the way, had just a horrible earnings call. Just terrible. GlaxoSmithKline Beecham, in Israel Checkpoint Software. So my guess is that these are story stocks. So, but in general, positive, up. Now, let's go into certain things. By the way, you want to buy a shirt? That's nice. It's an advertisement. I don't make money at that. Crude oil. Let's take a look. So when I look at crude oil for the week, I'm like, oh my God, it's $57. I remember when crude was free one day. It was like they give you money to put the crude somewhere. But in general, that's a pretty good number. That's a pretty high number. For the week, crude is up. It started the week around 52. It's at 57. So when you think about it, when petroleum products, when the core building block of petroleum products is up 10%, that means the energy sector, 3 months from now, 6 months from now, you're going to see this starting to cascade through into earnings if it stays. It's a harbinger. What's a harbinger? It's a predictor of future economic activity. If we look at the year, you see what I'm talking about. I think it went negative. Actually, my wife and I talked about maybe we'll get some 55-gallon drums, maybe 1 million of them, and we'll store them. We'll get all the crude oil, we'll put them in, and then when the market goes up like now, we'd sell them. We could have had 55 million barrels, or 50 million, or 100 million barrels, right, at $57. That's great. Could have made a ton of money. Nope. We didn't have anywhere to put it. I mean, we live in a pretty small house, so. The Russell. Small stocks. Look at that. A beautiful upward trajectory for the week. For the year, it's also up. You know, I had a tough COVID fall, but pretty much been straight up. It's been beautiful. So, but my point is, for the week, the Russell looks great. Russell's up. The Nasdaq, the tech stocks, how did they do? Oh, they're up for the week. The S&P 500, big companies, big valuations, Amazon, Facebook, also up for the week. Everything's up for the week. What's going on here? Let's look at the Treasury Yields. By the way, there's a theme here. Look at the Treasury Yields. They're up pretty much the whole, look at that. It's like a beautiful lineup all week. Look at that. Well, the line just connects the dots. Here's the trading day. Opening higher, driving that price up, right? So what that means is, let me put it into perspective. Over the past year, 10-year bond yields have been as low as 0.4% and as high as 1.64%. So it's a big swing, and right now we're at 1.17. So more than halfway up the 52-week range. And if we get up to that 1.6, that's a pretty big move. So just something to keep your eyes on, the long bond. Bitcoin. Now, we do not work in Bitcoin. We have compliance issues, and there you have it. We did tweet out Ray Dalio, Bridgewater, his commentary on Bitcoin. He said, I'm happy to put money into it if you're willing to lose 80% of it. But if you look, you're almost $38,000 per Bitcoin. For the week, it's a tremendous run up. It's from 32 to 38. So imagine a currency up 20%. I bet you if I were to look at any currency, is it up 20%? Let's look at the Great British Pound. Up 20%? No. For the week, 1.3675 to 1.3735. That looks like maybe 1%. Maybe 1%. Maybe it's up 1%. That's for the day. Let's look at the week. Oh, look at that. It's pretty much flat. It's up a hundredth of a percent, tenth of a percent. So what we expect to see is we expect to see currencies pretty flat. The Bitcoin as a currency is up 20% a week. That's not a currency. That's a racetrack. All right. Here's our website. We did a run this week. We did. We analyzed all the stocks this week, right? And we produced a few blog posts. If I take a look at what we picked, I don't want to tell you what we picked. You got to buy a run if you want us to give you the answers. If you can't afford the run, you call me. There's a contact in our website, right? You can't afford it, you call me. You say, Mr. Cohen, I can't afford a run. Can you help me? Go to the contact, click. You can call my cell phone. You can call our main office number. You can send me an email. You can send me a postage paid letter. You can even tweet me, or you could direct message me on Twitter. You can go to my LinkedIn profile and you can send me a message on LinkedIn or try to connect with me there. Lots of ways. And you say, Jeff, I want to buy an analysis. I got 100 stocks. I got 50 stocks. I got 5 stocks I want to look at. I got whatever I got, right? But I can't afford the $100. I'm sorry, Jeff. I just can't. I'll give you whatever. I'll give you $50. We could work something out. You know what we're going to do? You're going to maybe get on the thing with me. You'll do a little talk, or maybe you'll send out some tweets or some messages that you did the run and here's what you thought. And I'm not going to tell you what to say, but maybe you could do some marketing for me. But if you're really that hard up, let me know. I mean, at $100, if you're investing in the stock market, you receive the best portfolios that we find. We pick efficient portfolios. So, but we did a few blog posts, and I wanted to show you what those were. First one was rather fascinating. Overnight trading. So we're long one stock. I only care about one stock. It's SMLP. Summit Midstream Limited Partnership. They do oil pipelines, processing. They produce water for fracking, gases, things like that. It was down $4.50 overnight. You can just imagine. I'm getting up out of bed this morning. I mean, I relaxed last night. It was great. I was playing Pokemon. I had the cat on the bed. It was really just a really relaxing day, early day, right? And then all of a sudden, I get up in the morning and the thing is down $4.50. That was 21.95% drop overnight. I'm sleeping, right? So I say, you know what? I love the stock. I don't care. It's down 20%, whatever. Let's move on. So I go check on it at 8:56 in the morning, and it's only down 3 cents. So in fact, the $4.50 didn't do anything. It was just like noise, right? I thought about naming the post PM or Evening Anxiety. So here's the cat. There's Oshawott, who I love. He's very grumpy as a Pokemon. And then I talk about it, right? You're down 450 after hours. You're down 3 cents at 8:56 in the morning. That's crazy. And then I talk about what the Yahoo Finance community had to say about it. Well, there was a new SEC filing. It could have just been all fun and games. And I do a little estimate on what it might have cost to do that. And so I learned 3 things. And I want to talk to you about this because I had a couple blog posts, but this one I really learned something today. I want you to learn from what I learned. First is you have to have a strong level of conviction to put a lot of money into a stock. I saw a 22% drop as a buying opportunity. Okay? Having that conviction that comes from fundamental analysis and research. Do you know I went on LinkedIn and I found the guy? There's a guy who runs the Double E pipeline build project for SMLP. And I tried to connect with him on LinkedIn. If I get a chance, I'm going to talk to him. How's it going with the pipeline, right? Like, do the pipes fit together? And how's the permitting? And how's the cost going? And labor issues? And how's the weather? And how's COVID? Or is there any issues? So I'm going to have a lot of fundamental conviction in that stock. And that keeps the anxiety in check. And it allows for sustainable investing. I'm not up all night. If I was up all night, I'd have been dying here. I'm not up all night. The second is being in a stock that has a very low capitalization, one that trades with low volume, and one that seems to have very few eyes upon it, and I give some evidence here, can be moved significantly overnight. Now, it snaps back when the market opens, but that subconscious price impression was made. I want you to think about that. If somebody really wants to, they can drive that stock down 22%. There's nothing you can do about it. It doesn't stay down. It feels a lot like market manipulation, which is illegal and I don't like, right? It happens. The last thing, when you see people trading a stock and they're buying 1 to 10 shares at a time, it's often just to move the price, get it moving. The math is clear. If you own 1,000,000 shares of a stock, let's say you own 1,000,000, let's say I own 1,000,000 shares, right? I don't. That'd be nice though. 1,000,000 shares. And it costs me $1. So I just bid 1 share to pay $1 more than market. And so it goes up, let's say 20 cents or whatever. Maybe it goes up the whole dollar, right? Maybe it goes up a penny. If I move the stock a penny, I just made $9,999 in unrealized gains on your investment. Now imagine it's the end of the quarter and I got to mark to market. Or now imagine it's the end of the options expiration and I want to drive the price up or down. Costs you $1. Move the stock a penny, right? This is the logic of why I follow social media for the stocks that I invest in. I read the darndest things. I once read how a guy pumped a stock illegally, and he gave the whole instruction manual on how he pumps a stock. That's great. By the way, this logic works the same way if you have 10,000 shares, right? So, and I do talk about how market manipulation is illegal, and I don't like it, and you shouldn't do it. Leave a reply. I leave you with Oshawott while I try to find the next blog post. I know I had a few of them here, and they were darn interesting. Oh, here we go. Yeah. insights from a 3,500 stock analysis that I ran earlier this week. So a few things that happen that are relevant, right? First off, we run a 3,500 by 3,500 by 3,500 matrix. We solve it. We solve it hardcore, and we solve it with like 6 different solvers. So we independently can verify and validate that one solver solved it by looking to see if a second solver solved it. And so sometimes we run them for an extra 2 hours just to make sure that the thing's solved, and does great. So what happened was, for about a day, maybe 36 hours, Yahoo Finance fed blank data into historical stock prices for a few NASDAQ stocks. But what that did while we were validating is it destroyed our ability to run the model. We were ending up without hard coding around it, which we just didn't do. We just went offline for like a day. We were getting 39 days of complete data. In one case, we only got 3 days of data out of 253 days. It was awful. Now it's self-corrected 36 hours later. The second is we ran the analysis on our server. We have a server. I'm pointing to it. It's right over there. It's a pretty big server. It's pretty powerful. I bought it for my PhD program. And it finds the best portfolios. I got a default set of settings. It takes about an hour-ish, 2 hours. So then we went back and we ran certain solvers. Just deep, 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 deep for 2 hours. No change in the answer. On the Mac, which is the thing I'm talking to right now, which is not that powerful, you find good portfolios, but you rerun it for an obnoxiously long time and you get better portfolios. So processing power matters. The other thing we found is when we change our risk settings. Yeah, we have a risk setting. We talked about it last week. So we used it again. We're testing, testing, testing. And when we move it from medium to low, we get many more stocks. We go from 2 stock solutions to 7 stock solutions. And we see companies that add better diversification. We get a lot more diversification. We get food companies. We get chemical companies. We get a nice range, right? And what it's doing is it's producing more targeted diversification that's based on the movement of stock prices, not emotion. We ran on the D-Wave Systems Advantage 1.1, the new one, the one with like 5,800 qubits. Out of 15 runs, we definitely hit a solid double. We hit a 4-stock portfolio that was in the ballpark of the good answers. And that's cool. That was good. Still not the best, but at least we're learning how to get good answers out of the thing. That's nice. The other thing we did, we shared information on Twitter. We shared skewness, kurtosis, and variance data on individual stocks that we ran. So we ran 3,500 stocks, and we found like 6 stocks that had positive skewness, were leptokurtic, which means they move a lot at the outliers. They go crazy, but low variance. So on a typical day, positive skew, they're not moving that much, and it's a good kurtosis if you're an options buyer. And then we also shared all the negative beta stocks by exchange that we found. And guess what the result was? Would you say we had 10,000 people reach out to us? They're very excited. Oh, Jeff, I think this is great. You're such a hero. No, we got nothing. I didn't even get a ham sandwich or a thank you for sharing the information. I went out there. Let's see if I could find the tweets. It's always interesting. I'll show you how to look at the analytics, right, of your company. Here it is. Beta stock. View the tweet activity. 1,200 people saw it. It wasn't that people didn't see it. 2 people clicked the link. 1 person actually detail expanded it to actually see the stocks. 1 liked it. So the challenge is that I just don't think they care. I mean, top tweet, beta stocks. 1,400 people saw it. You got 6 engagements, right? 3 people liked it, 2 people expanded looked at the profile, 1 person expanded. So 1 person got to read my cute little tagline. I removed them from our model. What's in your portfolio? I thought that was clever. It's like a credit card company. What's in your, you know, wallet? So I don't know. I don't know that I'm giving a lot of insights out there. So I just think this is very important. We can lead horses to water, but there's not a lot of people out there like striving for technical information. See if I can get back to the blog posts. There was another one. Just interesting, right? All the things we're doing, right? We're running jobs. We're looking at the overnight trading. Oh, there's some cool quantum pictures. And then this is from last week, so that's not relevant anymore. So let's take a look. What else can I talk about here? Let's close that. Oh, SMLP. I want to talk a little bit about this because in the spirit of full disclosure, I think it's very important to tell you if I'm in a stock. Why do I do that? Because I want to avoid all conflict of interest. No conflict of interest. Very important to me. For the right client, I'll even sell all my investments. I don't care. That's not what this is about. I just want to see how the model works. To be honest, if I can make a few bucks, let's make a few bucks, right? So SMLP has been an interesting stock. It's been as high with the reverse. They did a 15-to-1 reverse stock split in November. So when it's at $15, it's at $1. So the stock fell below $1 here, went up to $1 again here, and then did a slow death. Basically, the company was going to be delisted out of the New York Stock Exchange, probably going to go under. This was not a good story. October was a bad month. I'm guessing that if you worked for SMLP, Summit Midstream Partners LP, you were not in a good mood. And then all of a sudden they did some things. They did a lot of things. They bought back some debt. They redeemed some preferreds. They arranged financing and got FERC approval for their Double E pipeline. They did good things. And in November they did the reverse split. And so still not a great stock, right? I was reading about this stuff thinking they were doing the great things. But then all of a sudden now our model started to pick it. Right? This was an interesting time in the business. So we got in. We got in here at around $12, $13, around $12.50. And I'm sorry to say, but we sold at like $17.50. So it made $5 a share. I was feeling pretty good about it. Paid some bills. It was nice, right? But then as it was coming back down, I had a little seller's remorse. So start buying more. Now at this point, the model's not picking the stock. But because it picked it a month ago, right, we start doing this fundamental analysis. And I realized, you know what? It was a great stock. I think my last buy was right there at $14.93, which is right around the bottom. Stock's like $20 now. So there were a few things I learned though. I learned that the institutional ownership data is hard to verify. So I went to the Securities and Exchange Commission, the 13F filings, and I can't validate that number. It's not there. Okay, I hope it's 55%. I can't validate it. Maybe I can validate 20%, 15%. That's about it. Okay. The shares float, the shares outstanding. I mean, I understand that those are the shares outstanding, but there are shares held by the debt holders, by the limited partner, that might be more shares. So even that I can't verify and validate. You get a target price of 1440. We're well above that. Relative strength of 71. That's pretty high. People have been buying this thing now. An ATR is a true range, average true range of a buck 22. That means over a day it's going to move a buck 22. There's a lot of movement in this. Look at the volatility. For the week it's 9%. For the month it's 7%. You know the options prices? The the March call at the price that it opened at, the ask was a 200% volatility, implied volatility. That's crazy talk. You can't afford those options. I start to learn what all this means. Now, one of the things I do love actually, gross margins at 68.9%. Now, why do I care about that? Well, because with gross margins of 69%, if people decide to pump more gas and more crude through the pipelines, and they decide to buy more of the fracking stuff and of the water and of the processing, these guys make a mint. Their operating margin 39%. So let's assume they're spending 30 points of whatever they got now in the revenue. You're going to get an operating leverage of like 40 or 50% on a net incremental dollar. I love that. This is a stock that should go up a lot. It should. And the earnings per share next quarter, I don't know that we're going to see $14.34 in earnings for the quarter, but I just saw 2 days ago some analyst said it was going to be $12.12. He lowered it from $12.28. So you get a $20 stock that's going to earn 12 bucks. That's crazy. That's like that's like 2 times earnings. Go 1.5 times earnings. That's great. I love that story. Right? That's for the quarter. That's 1 to 2 times quarterly earnings. Come on, it's crazy talk. So I love the stock. Love the stock. So we're very long. We're longer now than we were last week. I don't know if I can get much longer. I mean, I could. I got a little bit more money to invest, but it's pretty long. Do your due diligence. This is a very risky position. You could actually lose all your money. It could go to zero. So please be careful. We did simplify our website a little bit. I wanted to show you that. So what we did, zoom out just a little bit. You go to the home page. All right. We're an IT management consultancy. That's it. Short paragraph. You could buy a stock analysis. You could buy a project. And we've added a ton of content for investors. I probably need to do one of these for quantum, but I'm so excited about the stock market part of our work right now that that's what I'm publishing on. I'll tell you why I might go the other way, but we'll get to that at the end. I love it. Free market data. Where do I find free market data, Jeff? Well, how many of these do I have? Oh, look, 18 locations for free market data. Then I got stock market questions. I got like 3 pages of questions, and these are pretty insightful answers. I've gotten a bunch of likes on them. And some of them are pretty long because I'm getting into some detail. What's the Dixie? What's the Dixie, Jeff? It's the US dollar index. It's published by ICE. It's with our trading partners, right? You want a quick look? Say, what's the Dixie? DXY. And you'll see how the dollar's doing. I got bond questions. I got stock option questions. Not only what is a stock option, but what's going on, right? Like, how does it work? What's a front month option? How do option pricing work? And then I talk a little bit about bonds, right? Some more bonds. Oh, it's in the wrong spot. I got to move those. But that's okay. By the way, long bond is not a 2-hour James Bond movie. It's a maturity of 5 years or more. So it's good to know, right? So then you want to look at some of our research. Again, it's simplified. This is cool stuff. And we have 3 papers out on archive. Paper 3, we walk through it. Presentations that we've done around the research, all for Article 3. Article 2, plus I walk through the article. So some people, it's harder to read it. It's a little technical. It's a little financial. In fact, it's a lot of technical and financial. Then there's paper number 1. And then we had a few media mentions, a few shout outs there. I don't want to lose them, but you don't necessarily want to see them either. So if you get through all the research and you want to say, oh, they had 25 media things, that's great. And then for some people, they just want to buy an analysis. I'm hoping lots of people do this because this is what keeps me in the bread and the butter here. Run a stock analysis, right? We find efficient portfolios with lower volatility, higher returns. We have our own platform. We don't use someone else's platform. We built a platform custom, and we use our own algorithm that we built custom. $100, $200, from $250 to $1,000. For $100, I'll spend a half hour with you and I'll explain it all at the end. We can walk through your stock picks. We can talk about it. I'll probably take some homework assignments and come back and help you. And for $7,500, we'll build you a platform, or we'll build you a custom algorithm, which is very nice. So we simplified it up. We took a lot of the junk out. We got 2 client testimonials. Thank you, clients. We love you. We got our stock market FAQs. And then if you want, you can go to Medium, and you could take a look like there. January 11, market close, dividend payers only, how'd we do? And so we like to publish our findings in Medium. January 29, actually 6 days ago, 29th, January 5th, December, and we've updated a lot of these. So we went back and we updated. So if you like that kind of stuff, you can really read about our stock picks and how they're doing. You could recreate, like, okay, he picked these stocks at that time. Did that make sense? Looking at it after the fact, did this make sense? What you're going to see is in every single run, we beat the QQQ and the SPY. We beat the S&P and we beat the NASDAQ every single run. Love it. That's why we're investing our own money now, because there's money to be made here. It actually works. It's not just a lot of talk. So I wanted to show you that. That was important to me. We are slowly learning Gecko, Microsoft Azure, Quantum, and we'll slowly learn more about with the IBM Q experience. So I had a conversation today with the team. We talked about, let's run some more Q and let's fix that portfolio. And they're like, Jeff, it's not so simple. Make it sound so easy. We're not going to redo the stock picking and the compilation of the quantum operators. That's really hard. It's not easy, Jeff. It's hard. So I'm like, nah, come on. We got this. We're just going to change it around a little. We're going to make it shorter. We're going to make it run better. We're going to put it on the 5-qubit ones that have really good entanglement and that stay entangled a long time. It's going to be great. He's like, no, Jeff, it's not going to be great. It's going to be really hard work. Are you ready? So I thought that was interesting. So let me shut a few of these down. Let's think I want to talk. Oh, by the way, we are Better Business Bureau, A+ rated. If that matters to you. Matters to me. We're in business 10 years and we protected our reputation. And so, in fact, I just got this thing, which I like. I'm going to be framing it. Certificate of Accreditation, Chicago Quantum, Better Business Bureau. We love that. We're accredited. We're a good business. We're honest, full of integrity. We try to help people. So in the spirit of trying to help people, we may have a competitor in the field. A competitor. Do you mean, Jeff, that there's another company that might be working to make money in the stock market using quantitative analysis? I'm shocked. Wow. I'm not shocked. To be honest with you, I think it's great. I love competitors. So, let me take a look. I know first. First off, clever name. I know first. Jeff, I know. I know when the stock market's going to go up, and I know when it's going to go down, and I will sell you the pick. And they have awards, and they have videos, and they have tech finance, and all that kind of stuff. It's great. They have professors and math guys. I think it's helpful. But what I find interesting about this, first off, they got a couple of people, and they got people in jeans and white t-shirts, which I think is nice. The owners must have the suits. The workers have the white t-shirts. At least they give them the t-shirt, which is nice. It talks about how they do it. I love it. The billionaire's portfolio. The introduction. But what I really thought was fascinating is you could look at some of their runs, how it works, the instructions, the articles. And so I think it's really helpful. If we want to look aggressive stocks, average returns over 2 weeks, top 20 signals, top 10 signals, top 5 signals, it's up 5.5%. That's not bad over 2 weeks. You're going to eat, you know, in 1 week, 1.9%, in 3 days, 0.6%. So, super risky stuff. Over a month, 5, 6, 7%. Over 3 months, 11 to 13, 14, 15%. I mean, that's not bad. When you look at our results with the quantum computer, yeah, we're doing a little better. But that's okay, right? They're doing God's work here. I think this is terrific. I want to learn more about them. I want to meet them. If you're out there and you know anyone from I Know First, reach out, make an intro. I want to understand more about what they do. They talked about using a genetic algorithm, a machine learning genetic algorithm. That was the first thing we did. My God, it was over a year ago. Genetic algorithm now, it's still a good solver, but I don't know. We'll have to see. We'll have to see how they're doing. Last thing. There's a question for you. What do people want to know? Okay. They want to know quantum hardware providers. Shall we provide an update? So when I look at the Medium posts that I've done, in this past week, 17 people looked at the top 13 quantum computing hardware providers, and 9 of them looked at the most recent pick. So I guess 9 of them, they wanted to know how to make money, but 17 are doing research. You know, we haven't updated that report. I want to say it's November of 2019, maybe February of 2020. It's been a year. So maybe it's time to go back, take a step back from the stock market, start looking at hardware providers again, the quantum industry, the ecosystem. Maybe we need to give a little update on the ecosystem. So I'm thinking we maybe want to do that. Would always welcome your input. And at the very end, I like to give a 1-minute commercial. So here's my 1-minute commercial. Please buy a stock market analysis. How's it work? Please. First off, I work really hard, and then I don't have to put my money in the stock market, possibly lose it. I get to just work for you, and you put your money in the stock market. You click on our website. It's pretty easy. Oh, here it is. Oh, look, buy an analysis. Click on buy an analysis. Oh, I could run starting at $100. So if I don't really care about quantum, Jeff, I don't really care about quantum. I want to use your platform, and I want to use your algorithm. Okay? $100. Okay. What you do, you enter up to 128 stock tickers and 10 backup tickers in the text box below. But Jeff, I don't know 128 stock tickers. I'm never going to know 128 stock tickers. That's not how I roll. All right, let's go back. It's not going to work. Let's try something else. Let's find the best stock market portfolio out of the whole shooting match of 3,500 stocks. Well, that I can do. Let's take a look. You select the U.S. common stock exchanges for us to analyze. You can do one, several, or all. We validate, we wrap it up. So let's go down there and take a look. Okay, Jeffrey, I would like just the New York Stock Exchange. Those are big, solid companies. Um, yeah, I would like dividend pickers. Give me stocks that pay a dividend. And I want the high risk. Let's find dividend paying stocks, high risk. And you know what? Don't give me one stock. I want at least 3 stocks. Maybe I'll take 3 to 10. Okay. Additional note. Would like the analysis by tomorrow morning, please. My objective, I'm a swing trader. I want to buy for a week, then sell for a profit. Cool. Buy now. Wrap it up. Drop your credit card info in, or you can log in. It's 500 bucks. You wrap it up. Now the good news is afterwards you reach out to me, say, Jeff, I want to talk to you. Retail price is 100 bucks, and I'll spend a half hour with you. We can walk through your picks, and we can walk through what it meant. Was it hard to find them? Was it? What did we learn? And then I can even run some things for you. I can show you some stuff. I can show you kurtosis and skewness and variance and all this kind of good stuff. So that's how it works. If you do this, then I can also start hiring more people, get an office in Chicago, and get all the guys working, right? So this is my commercial to you. Please, if you don't mind, buy a stock pick. Or you could buy a project. I got guys in the team, right, waiting to do work for you. It's $1,600 a day. It's $250 an hour. We'll do specific quantum work for you. We could do it over around the stock market. We could do it in another industry setting. That's it. That's the commercial. So I want to thank you very much for listening. This is Jeffrey Cohen. You've been a great audience, and we'll talk to you next week. Bye-bye now.